I just want to know the debt position now. With Facebook and the rights, what is the debt likely to go down to? And I think if you're taking a quarterly tally of about 22,000 crore EBITDA, next year's EBITDA would be, FY21 would be at least 80 to 90,000 crores. So it is free cash flow positive in FY21, you think?
I think there are two ways of looking at debt. Firstly, the reported net debt that the company is quoted at 1.6 lakh crores.
Yes.
And secondly, if we add back certain elements such as suppliers credit and spectrum liabilities, we think that the net debt would be closer to 3 lakh crores. Now, with all the divestments that Reliance has already announced and seem to be firmly in the bag, they would be getting money to the extent of a little more than 1 lakh crores shortly in any case, and they would be having fairly healthy cash flows. So that would put them reasonably on track to becoming a zero net debt company by the end of this year, based on the reported net debt number. Now, if you add back and the number that we suggested, closer to 3 lakh crores, then they would require not only free cash flows. Notably, they have achieved a 20,000 crore free cash flow in this financial year itself, in March 20 itself, and that should only grow. But then, to that extent, they would require at least one, if not potentially more, deals. Large deals such as Aramco or the fiber in bit, which would be in excess of 1 lakh crores to go through. Yeah. To be honest, now beyond these levels, I'm not worried about debt. In fact, we would think that some debt is desirable for any company because debt does give you a tax break. So I'm not sure if actually going to a zero debt is the wisest decision.
Okay. Well, then just a final question to you, since we will be heading into the market opening. Do you think with this sweetener of the Silver Lake also coming in, and of course it would be seen that such a large tech investor will be the first of a series of more investments, do you think the rights issue now becomes very attractive?
Well, this is certainly a silver lining, and pun intended. But I think the rights issue was at a reasonable price in any case. So this is icing on the cake, but I don't think this swings the needle entirely.
Okay. Yeah. All right, Jal. Thanks a lot for your time today. It's a stock which is actually outperforming. The market is down quite a bit, but SGX was indicating 500 points down. It's nowhere near that. The Nifty is down 326, and large part of that is Reliance is starting slightly less down compared to what the GDR indicated. But anyway, let's take the 9-10 calls. The Bank Nifty is down 5% in pre-open. Don't lose sight of that. Ashwani, if we start here, is there a trade on the index, and what's the 9-10 call?
Well, if we do get a 100-point rally post the open on the Nifty, some sort of a pullback, etc., you would tend to get short. So the idea is both on Nifty and Bank Nifty, pullback rallies should be sold into. 914, I would think metals will take a beating. So Tata Steel is a sell with a stop. Yeah, with a stop around 304 and look for target of 288.
Okay, fair enough. By the way, even lever is not starting as much down as a lot of people would have thought. So let us see the market's first trade. Sudarshan, what's your 9-10 call?
Well, that call is that I need to build up short positions. Now, the ideal way, of course, would be for the markets to rally and oblige me. But I think we should do it in two parts. Take some short positions by buying puts at the open and wait for a rally to add on to it. My stops would be far away above 10,000.
Okay, fair enough. And the 9-10 call?
Yes. PVR is a short sell with a stop at 1,050 and a target of 960.
Sudarshan, if you can stay on for a minute, I wanted your thoughts as well on two charts, RIL and HUL.
See, RIL is likely to remain an outperformer. I have been upbeat on it from a long time. I continue to remain upbeat. I have no understanding of the news that is coming in. So this is purely on the charts and its previous outperformance. Now, if the whole market tanks, RIL will not be left alone, but it will still outperform. That's my point. HUL is probably reaching a significant resistance area and could go into a trading zone for months altogether. So for a trader, it's not an opportunity to do anything there.
Okay, just want to make a point before we go to Mitessh that while the SGX is trading at 9378, pre-open settled at 9533, do remember SGX Nifty is a traded rate with decent volume, so there's a good chance that after opening at 9533, we perhaps coincide with the SGX Nifty. That always happens. The reference point would be SGX Nifty low. SGX Nifty low is 9220 on the future, so that will be the reference point for those who are trading the first hour. Mitessh, your 9-10 call.
A slightly tricky one, Anuj. I would want to buy into Ashok Leyland if it opens about 3-4% lower, which is close to about 50, and see if the intraday charts don't see a fresh low. Then keep a stop at 48.5. I think 54-55 should be your near-term target.
All right, Mitessh, thanks a lot for that. Just a minute to go. Manisha Gupta, commodities editor, is also joining us on the phone line to tell us what the update is in the commodity market this morning. Hi, Manisha.
Morning, and thank you for that, Sonia. Well, not a great date or a beginning, because the U.S. is threatening to impose new tariffs on China, and that is what the commodities are reacting to right now. Last week was a good one because we saw the crude oil prices gain between 16 to 20% for both the crude varieties, but we've started Asia on a weaker note right now. There are some positives for crude even then, because the OPEC and allies are embarking on a record output cut by 9.7 million. The U.S. energy firms have cut rig count to the lowest in 2016. The U.S. inventories rose less than expected as well. So these are a few cues that the markets will keep an eye on. But the industrial commodities haven't started so well. So whether it's crude oil prices or the industrial metals, the whole metal package started on a weaker note as well. Because the first phase deal is something that China and U.S. never got to start on. And with the whole coronavirus and the back and forth and war on words happening again between the two countries, you have seen most of the industrial commodities start